Hey investors, welcome back to another episode of Vishal Vealth View. In today's episode, we are going to discuss the recent tariffs imposed by Trump on countries like Canada, Mexico, and China. Also, he's imposing tariffs on allied nations in European Union like France, Germany. This is going to impact economy of these countries because these countries have a good amount of uh, GDP as exports to US. Now, there is an investor frenzy in the market because there is a fear of trade war as these countries come in with reciprocal tariffs. Now, the US market has been correcting for past few weeks and it has corrected almost 18%. And there's a good chance there is a recession kicking in by the end of this year. So in this video, I'm going to answer all of these questions. How am I viewing this world and what am I doing with my US investment? And where am I taking this capital in the future? So before we start this video, investor, this is not an investment advice. Please invest your money only after consulting a certified financial advisor. Please use this opinion as a another point of view for your investment decision. And yeah, let's start this video. So first, let's start with the question: what are tariffs? Essentially, tariffs are a tool जो कि government use करती है whenever they want to protect their economy against a certain country. It's basically a tool. So imagine you as a consumer wants to buy a certain product, let's call it phone, and in India, and the government of India is importing that particular phone from another country, let's just say China, and the government wants us to protect that industry, then they can impose tariffs on those particular goods. So whenever we are importing a phone, you as an end user have to pay a certain amount of money to the government. Now, this is a tool that country will always use to protect their key industries like defense and certain sectors that are really essential for the politics of the country. For example, farming in case of India. Now, question comes, how does tariff affect you? Doesn't matter if you're sitting in India, US, Canada, doesn't matter which country you are watching this video. If you are buying a product that has tariff imposed on it, then you are probably paying the price for it. So it's always coming down to the end consumer who is consuming a particular goods and service who is going to pay the tariff to the government. Now, as soon as Trump came into presidency, he already promised that he's going to impose tariffs on multiple countries, specifically allied countries like Canada and European Union. But a shock has been that he thought that that they thought he might use it for like an aftershock and negotiate a business deal. But he's actually imposing tariffs on these countries now, and it's going to affect the livelihood of the people in this country. Now, the question comes in, how is it going to impact the stock market? Now, definitely, when you impose tariffs on any country, the consumers have to pay the burden. Now, US economy, which is already suffering high inflation and the interest rates are also high, if you put in a mixture of imposing tariffs on majority of the goods, specifically cars that is being imported or car parts that is being imported, there's a high chance of US economy entering into recession. Now let's try to understand how will this impact US economy and the world economy. As soon as Trump imposed tariffs, some other countries started imposing reciprocal tariffs, specifically Canada and China. Now, these countries are going to impact it because a large part of their GDP is contributing towards exports, specifically the ASEAN countries like Vietnam, China, and then you have Japan, South Korea. These countries are going to be the most impacted because a large part of the GDP is coming out to be exports to the US economy. Now, what's my best case and worst case scenario with respect to India? Because majority of my holdings is in India, and I have at least 10% of this stock portfolio sitting in the US tech ETF. Now, in terms of the best case scenario, let's consider the best case scenario first. On 2nd of April, there's a trade deal that comes out where we have cut down tariffs on majority of the products except farming products. And there is a defense pact also being signed along with that, and we can move ahead with that. Like that's the best case scenario I can imagine. Worst case scenario, Trump imposes reciprocal tariff on India. That's the worst case scenario. And we being uh, not a major exporter to the US economy do not get impacted that much. Like, okay, we are going to be impacted, yes, for sure, but it's going to be like a slap on the wrist rather than a like arrow on the chest kind of situation. So that's why I think India might not be impacted too much because we have a large domestic factor, both in terms of investment and in terms of consumption that drives the GDP up. And in terms of stock market, I do believe if the sentiments in the US is down, then you can never guess in which direction the Indian markets will be going. But to large extent, in the key industry of India in which government is spending, I do expect a secular growth and the secular investment to keep going on and having a growth more than 10% or 12% in mid cap and small cap space. So now let's talk about what am I doing with my US investment. So I invested almost 2 lakh in Motilal Oswal Nasdaq 100. And I'm sitting on almost 100% profit on my investments over here. And this investment has uh, been falling down since last January. And I believe this is going to be a secular trend because the consumer confidence, sorry, the confidence in the investors in US economy will fade slowly because Trump is imposing these tariffs and US economy will probably enter into a transition phase. So I'm thinking about rotating this money back into some Indian equities because Indian market is already is in a correction phase, and I do expect India to perform relatively better rather than US economy in coming 1 or 2 years. Now, along with this, I also have investment in this tech heavy ETFs, NYSE FANG ETF. Now, I'm not planning to sell this investment. Rather, I'll hold on to this and probably do some downward averaging when the market has corrected probably 30% from this level. And that's a Q I'm also going to look for Nasdaq 100 because that's a good buying opportunity for me in the US market when probably the sentiment has also been bottomed out. Now, does that mean I'm cutting off all of my US positions? The answer is no. I'm still going to hold the NYC FANG ETF and I'm planning to even build more position when the market is down. Now, even though I do believe there is a strong secular trend for the AI industry as well, but the market clearly seems to be overvalued. And when the sentiment's correct, the overvalued things do get corrected. And I'll probably think about that as buying opportunity, but right now I think this is a good time where I want to uh, book some amount of profits in the US tech ETFs. Now, there's also a school of thought which says that usually the trend for a particular technology takes 5 to 7 years and then it enters into a bubble. Now, the entire AI trend has not peaked out yet. It's still going to enter into a bubble territory. But clearly, when you are investing in such an overvalued ETF or an overvalued industry, you have to be a bit careful because you never know when the clock is going to turn and the market will just start reversing and you'll not have a way out. Based on the current Trump tariffs, I do feel there is an inherent risk towards this overvalued investment. And that's why I'm being a bit worried and I'm taking some cautious steps and booking some amount of profits, rotating that money into places where I think the growth might occur in the coming years. Now, this does not mean I completely am getting out of US tech equities because clearly these companies are amazing companies. That's why they demand high valuation. But obviously, there has been a valuation froth, and it might be a good time to just rotate this money into some place else. So, where am I planning to invest this money? I think I'm going to invest this money in defense ETFs in India. I do believe there is a secular growth trend in this industry in India because a majority of the continent, specifically China, Europe, US, all are thinking about spending more money on defense, and India has been increasing its defense budget over the past 10 years. So I do believe this secular trend will continue, and this is a good opportunity for and good time to buy in this particular industry and this particular ETF. That's it for today's episode, guys. I hope you enjoyed this video and found this content useful. If you want me to keep on creating this video, please hit the like button and subscribe to the channel because it helps support this community. Bye bye. Happy investing.